Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Happy Friday, everyone. How are you doing, Austin? We've got a nice, sunny, finally summery type of day here.
It's nice. We're finally getting some summer. It means my allergies are flaring up, which is always a good feeling. But you know what? I'll take the sunshine and being able to get outside. If it means I have to take a reactant, I'll live. I'll be okay.
Yes. You know, it's my allergies are just starting to go. So yeah, today we're going to talk a little bit about vertical integration, because I do mention it quite a bit, and there's obviously lots of pluses and lots of negatives. I also just want to kind of set the stage a little bit, because I was looking through this Goldman Sachs briefings that I get from them every once in a while, and it kind of spells out like small business in the UK are running on empty. So the survey for the UK, 47% of entrepreneurs believe the economic outlook is worse for small business than it was at the height of COVID-19. Now that's when they shut everything down and they did the first thing, kind of impact. So those that were able to survive that shutdown are obviously, if you were able to survive that, that's pretty impressive. That just means now you're into the hurt again, because we haven't seen, like, those effects haven't stopped. We're just starting to see them now, and this is where I hate when politics gets involved, because they go, oh, it's the fastest rising economy, fastest employment, betterment. It's like, you shut everything down. So if you're the one who shut it all down to nothing, and then you have a percentage increase, well, of course it's the fastest growing by percentage. But that doesn't mean the economy is doing well, because it's not. And I mean, and I know that, listen, you don't need to go doom and gloom all day long, but when we have such little trust in media and in politicians and in those quote in power, honesty would be the best policy. And then people would go, let's, kind of even with Janet Yellen saying it's transitory inflation. I don't really know a lot of people who actually believe that. I mean, you'd have to really buy into corporate media entirely to not see what's right in front of your face.
Well, and even then, like, I was just, because before we kind of get into the vertical integration thing, the latest numbers came out on inflation today. And I think you and I and a lot of people that we talk to can agree that it's much higher than what it actually says that it is.
Yeah.
They are saying it's 8.6%, which is a new 40-year high. Even if you just take that, that's the highest since 1981. But Heather Long at Washington Post, so actually a little bit of corporate media, did a good breakdown here. She put some numbers together, and I'm just going to rifle these off.
Yeah.
Groceries up 12% year over year. That's the biggest increase since '79.
Yeah.
Chicken up 17.5%. That's the largest increase ever.
Yeah.
Prices at restaurants up an average of 9%. That's the largest increase ever.
Yeah.
Fuel oil up 107%, largest increase ever. Electricity up 12%. That's the largest since '06. Airfare up almost 40%. That's the highest since the 80s. General services up almost 6%. That's the highest since 1990. And rent, and I don't believe this number at all, up 5.2%, which is the largest since 1987. Now, the way they get those rental numbers is not by asking guys like you or me or anyone who might be in the rental market. They're asking the actual property owners, how much have you increased your prices by? I would say that number is much closer to probably 20 or 25%.
Oh, at least, yes.
Than it is at 5%. But regardless, that even if it's 5%, that's the highest since 1980 as well, which is absolutely staggering.
No, and if you asked anyone if in Vancouver, do you think rent is reasonable? I mean, it's not. Or Toronto. I mean, it just simply isn't. So. And I just kind of want to kind of mention this too, because, rising cost of doing business, inflation reaching a 40-year high in UK as well. 78% of small business owners reporting they've been hurt from inflation just in the last year. the Great Resignation. 54% of small businesses have negatively impacted by staff shortages. And that's a lot of people also just saying they don't feel they should have to do a crappy job. And don't get me wrong. When I was young too, I wasn't thrilled to the idea that if I had if I just graduated from university, that I had to go work somewhere not ideal. Wasn't very exciting, because you've been sold a dream that they can't fulfill, and they definitely can't fulfill it right now. And that's why you have like the immigration situation where they're like, we need all these new migrants to come in. You go, well, you can't employ the current people here. And then they say, well, because they'll do the crappy jobs. And you go, well, that's how fair is that and fun for someone to go, great, I've left a difficult situation to basically have to live an hour outside of a city to somehow get into that city and work at Tim Hortons. And I'm supposed to now feel blessed for that. And that's the model. That's the jobs that they're talking about. And that's not fair. It's not fun. And that doesn't create a great community. But
no, absolutely not. But it does kind of lead us into kind of the question of the day, which was, we've gotten asked by subscribers and followers before, Andrew talks a lot about vertical integration. Why is that something that he focuses on? Why does he think it's so vitally important, especially when you look at a company like DME, who we talk about a lot?
Yeah, for sure.
They're your kind of prime example one. So my question to you was, why do you care about it so much? What kind of is it, and how can it help us kind of combat this rising inflation, this increased, gap in the labor force and stuff like that? How can it kind of tether this all together and help push us to kind of where we need to go?
I'll frame it in that there's a McKinsey article, and it's actually an old article, and it talks about how risky vertical integration can be. And this is back, I think, this could be 2003 or even in the 90s. And but it's a great article because it talks about it being a very risky strategy. It can be expensive, it's complex, and they're talking about on a bigger scale. Because really, when you're talking sometimes about vertical integration, that's globalization to a large extent. It's basically saying like Amazon started off ruining bookstores. That was their whole model, was we're going to put bookstores out of business and just sell online. To now, literally, you can have your socks delivered, you can have food delivered, eggs delivered, and it's convenient. But it got rid of all of these businesses that people could run. And because you have a megalith like that was allowed to run at a negative, their Amazon business still isn't profitable. They're profitable on their other arms, their other segments. They were allowed to because they were funded properly. Nowadays, if you said, I have a business and will you fund me, say at a bank, it'll never be profitable. They'd be like, no.
Yeah.
So is it unfair? Yes. But I never like fair because there's nothing in the world that's fair. But it is ridiculous when you can see that you can run a business where your core business is this, is allowed to run at a negative forever because you've got bigger goals. So there's a bad and a good. But I like the good because in certain specific cases that we're sitting in right now, when you have supply chain issues, trying to get rigs, trying to get work. I mean, trying to get people to work right now is very difficult. And that sounds like such a ridiculous thing to say. Why don't people want to work? That's a bigger conversation all on itself. So getting crews to go do the jobs, to do the work is difficult. Getting then the equipment. We've got a supply chain issue that's huge. And then we've got gas issues now on top of that because they want to do this transition now without a plan, and they don't have a backup for energy. And they go, fine, well, you're not allowed to drill. We're not going to, and the banks are saying, we're not going to lend you money for big projects. We're going to stop as much as we can. So you go, okay, well, what effect does that have? It means that all the transportation, all the trucks that deliver on land now have gas prices. I don't think we need to go into that, through the roof. So their costs now have gone up, 40 something percent to try to deliver these goods. That has a huge effect. So if you can take charge of, and especially like if you're a mine or you're a driller and you say, we have a product we can get out of the ground. If I can get that to a direct retail seller or to an end user across that whole chain, there's a lot of small businesses and other people that have to work in to make all that work. But if they're running into issues and if they can't accommodate, or if this and that, or the costs go up so high, in the case that whenever we talk to Don or Robert over at DME, for them, one of the solutions was, we'll just buy 5 trucks for moving equipment because the cost was becoming so prohibitive for them just to make an investment, have 5 trucks. They've set those up for the next 24 months and it's a profit center. That's not only solves the issue, but it gets through that supply chain faster, more economic. It's now a profit center rather than a problem. And they have more control. And it works as well as that they say, we don't want offtake agreements. We know that we can go and sell this. So a question someone asked then is, well, can you get those sales contracts? Are you able to do that? And this is where some companies or investors and analysts go, well, isn't it easier if you just get an offtake with XYZ? Sure, of course it is. And you can lock in a price and whatnot. But when you've got a team that can handle it and they've got as much experience as they have, and you look at their board, why would I give up that profit? Like if every step of the way, it's kind of like if you look at a lot of funds now that do like large family office funds that do infrastructure, they'll do a project for 10 years and they want each piece of that pie. So it's who's delivering the goods, who's then doing the asphalt, who's doing this. At each step on all of that, there's a profit to be made. And if you can take that, that's a huge, that's adding all that up is a big number.
So then it kind of becomes a situation for a company where they can say, yeah, you know what, it's going to take us a heavier and an initial cost at the start to do this, right? Obviously, in the case of the example you used with Desert Mountain, where they bought 5 trucks, that's going to be more expensive than renting 5 trucks for, whatever, for 6 weeks or let's say. But what you're doing is because of that initial investment, you're planning to lower a lot of the transportation and turnaround costs, stuff like that. You're going to reduce a lot of the disruption and supply issues that you can run into. You're going to lower general costs across the board and therefore improve your overall profitability in the long run.
Yeah, because I have to give you cash today. And that investment could be better suited going in the ground, say. But right now, with inflation the way it is, and what they've also done is prepaid for a lot of work, prepaid for things which is also smart because we're in such a very strange time. It's better for that money to deploy today than you having sitting on it because you're losing it. With inflation, the money's being robbed from you. It's being taken away. So you're better off to prepay things, get it done, get it moving, and then raise money at a different, down the road. In a normal market or in a good frothy market, no, you don't want to. You want debt. You want to leverage as much as you can. But it really works right now. And because they're going to, profit on each step of the way. It's very attractive. Now, where I don't like it and where it can go, and it's also kind of where we see things, and I like it and I don't like it, is when we talk about Lake Resources, that lithium company down in Argentina, where they have an MOU with Ford, or even Tesla with Talon, which is the nickel company. When these companies start going, okay, we need to get lithium, we need to get some of these products out of mining companies. I don't want to go to the market because lithium right now is pretty expensive. Uranium is going up. A lot of these companies should, if they're smart, and should be going, we need to get these. Do we need to get into the mining business? Now, they're not going to literally be the mining business, but for them to go invest either JV or heavily or more so makes sense. And if you run that playbook through, you literally could have like Google. All of a sudden, Google also mines. And this is where it can get to a big, ugly globalist kind of structure where it more than likely would fall apart. But what I'm hoping, though, is, you see this contraction and expansion in the markets all the time, whether it was Standard Oil or Bell back in like the 30s, 40s, 50s, where there was Bell, then they dismantle it because it gets too big. Now, the accumulation of mergers, acquisitions, and then the tearing them apart, that is a lot of fees for investment banks. They do well either way. And that does actually work, that kind of flowing up to one big conglomerate and then tear it down into tiny little mini pieces. And that back and forth actually does work. That we're seeing on that big high end, it's very tough. Like, even Amazon right now shipping goods, the cost is very high. And it's just too big a monster to try to control and to manage everything. But if you were able to be a Desert Mountain and you have the ability to go, listen, I don't have to be locked into your contract. I've got a goods that's we know, and I know exactly who the market that I can sell to. It's pretty ideal.
Yeah, it becomes a very obvious kind of situation of how they can scale it and control the process, making it easier for them to get their supply to market in any kind of situation. If you can control that process, you're going to run into less hiccups normally than you would if you're having to deal with separate contractors and different, a different supplier to deal with this section, and then you're working with someone else to deal with the transportation of it, yada yada yada. It becomes a lot easier for someone to sit there and say, yeah, I would just want to control the entire process and oversee all of it, and then I know that we're doing it the right way, the way that we want to do it.
And especially if you've got the expertise, like, I mean, their team, they've done offtake agreements. They know how to sell. They know all of that. So for them, it's not as big an issue. It wouldn't be like you and me deciding to build a separate parallel business that does something similar in our kind of work out of nowhere without any knowledge. I mean, people go, why are you wasting your time? Just hire someone to do it. So there is that, on an obvious scale. But even if we switch from, oil and gas, and we look at like the agriculture business, I mean, a Verde Agritech, which we did well in, and then I'm actually looking at them again, or even a Nutrien. So if we look at phosphate, potash, all of these kind of fertilizer companies, Nutrien alone, they're expanding the production capacity by 40% from their 2020 numbers. So they cited structural changes in global energy, agriculture, and the fertilizer market, and with potash prices reaching over $1,200 a ton, they believe that they can continue to produce much more. So, I wanted to kind of throw them in because there are a lot of companies that literally are doing this vertical integration, and whether or not you like it or not, in a positive way or not, Verde Agritech is one that actually you can go literally online and buy their actual product. So they take it from ground and they can sell it to you and have it delivered to your house, which is amazing. If you look at even say like a Kroger's or a Walmart, Walmart has opened a 250,000 square foot milk processing facility in Indiana. So just for their own private label milk brand. Costco, they also have a $400 million poultry production facility in Nebraska. Amazon acquired Whole Foods for $13 billion, and they also have their own private label products that they have in there as well. I mean, you can see that too when you see, there are different Costco brand ones you see, and they're slightly cheaper. So they do that because there's a huge profit margin to be made in selling that. So it's interesting to see where it works and where it doesn't work, and certainly. If someone looks at a name brand one compared to the one you might find at Safeway, and you go, oh, that's the Safeway version. Yeah, people might go for 50 cents cheaper. I'll buy the Safeway version.
Well, I know for a long time, I'm not sure if this is still the case, but a couple examples to use with Costco is their Costco brand vodka was actually bought directly from Grey Goose.
Oh, really?
And as well as I'm not going to get the company right, so I'm going to list a couple different ones, but their Costco brand golf balls are either they're like Titleist or TaylorMade developed golf balls that they purchased directly and slapped their own label on.
So it's literally the exact same product. It's just you're not paying for marketing.
It's the exact same. It was the exact same product. They just repackaged it, threw their label on it, and distributed it out because they were able to get it at a wholesale price.
Yeah, that's incredible, and that's where it can work because it's cheaper, and they do that too because they can squeeze out profit margin in there because they know they've got a market. Yeah, they're sitting there now. I know some of their competitors would then say, we're not going to put our stuff in your stores. We're not. If you're not going to play ball, then you're kind of undercutting us. But that's what a frothy market does. You're supposed to fight. You're supposed to compete. And once again, I'm just giving some examples of a smaller scale where it works, and it works really well because we're solving strategic big issues that are affecting us in a monumental way. And I love seeing it in the case of Verde. I love seeing it in the case of Desert Mountain. Where I don't like seeing it is like knowing that, like, say, like a Google has a mining division. That in and of itself is bizarre. And it is and it isn't, because they look at it as they want the data. So they want all the data they can get so that you'd come to them for an analytics. Like it's a data play. You go, oh, okay, that makes sense. And if they could get all of the data from all of the world and then start making AI kind of predictions and different kind of mathematical equations to see if it can help find, good targets. Okay, interesting, great. But it kind of brings up an interesting question, and I ask that a lot now to all of these mining companies. Could it be that in a weird way, like, and I'll be ridiculous here, like Tim Hortons invests in a potash mine, or someone invests, you go, well, why would they do that? Well, because they need to have this for part of their ingredients and they don't want to go to market. And I mean, you listen to Elon Musk, I don't want to go buy lithium. I'm not going to pay that price for it. So I'll go buy a lithium mine. It's that type of thinking that could save a lot of markets in the short term, especially mining. If you want to get some money in, the best way is if there's grants. So some of these US companies that have access to some of this infrastructure bill grants, amazing. Like if you could take $50 million in as a grant from the government, that's $50 million into your coffers without putting out a single share.
Absolutely.
That can fix things in a hurry. Now, of course, companies won't be that generous, but still, you can clean up a company very well, and you've got that kind of strength when you have that kind of number to drill holes and to do things properly and not on such a little budget. You can propel the industry forward in a monumental way. So, will we see? I think with this vertical integration conversation, is that kind of I don't know, but what if? Are we going to see more of these huge deals where Toyota comes and says, listen, we need vanadium, or we need XYZ. And then all of a sudden home building or REITs are going, you know what? Or Fannie Mae goes, we're going to start investing in copper mines because there's a correlation there. That's interesting. I mean, it's that on its own is an interesting kind of discussion one could have with people, but I think that's what we need is some sort of is a new innovative way to look at how we're funding some of these things, and then to get those with the money into them, because it's tough to convince retail investors to be excited about mining, even when they know it's all the solutions that come from that. We really need big players that can withstand, a couple $1 million loss. To them, that doesn't mean anything. And just keep on drilling holes to find things and do them, once again, environmentally friendly, the proper way, with a bond at the end, so that if there's a end of mine life, that there's a recoup cost. There's lots of things that can be done.
Totally. And that might make sense for some mining companies who will sit there and say, hey, we don't have the management team with all the expertise to be able to do this all ourselves, or the initial cost of doing something like this can be incredibly high. We don't have the capital. We don't want to go and raise that capital to be able to do that. It might be easier for us to just bring in a partner who knows what they're doing when it comes to whichever phase, whether it's the transportation phase or the production phase, whatever part they need help with.
Well, I'm glad you brought that up, because mining is specific, that most people, if they're in this space, and it's a small space, they like the junior exploration, because a lot of them have no intentions of mining. They just say, because that curve of making money is they're two very distinct and different. Is just the curve of finding something, and that run up can be huge. Once you have a resource, you found something, that to get into production might take 5 years. So there's a holding pattern of 5 years of someone going, oh, I shouldn't be in this for 5 years then. Then there's the production curve, then it goes again. Whereas if you're an oil and gas company, or you're a hydrogen company, or a helium company, or noble gases like Desert Mountain, or you're a salt company where it's literally you get it out of the mine and it's in a store very quickly. That isn't a wait. There isn't, you don't have to crush the rock, leaching this, that. There's not a huge process going on. It can be done a lot quicker, a lot faster, and you can have profits very, very quickly. That you could have, a team very quick and nimble that could that if you assembled a management board, you would see we have the capabilities of doing that, and maybe we may want to. And it's interesting with mining, especially, you'll see they say, we're just here for the exploration. We've got some M&A. We've got some capital markets experience. When we find something, our full intention is we're passing it off to a big player, Newmont,
Yeah.
Goldcorp, whatever.
We're not doing this. We're not gonna. Yeah. Ready. We're giving this to someone else.
Yeah, and they have to be. They have to be fleet, and they have to be very economical, because you can't say we're gonna have 30 people on the board and management paying salaries because we're gonna build the mine and this and this and this.
Yeah.
It's very stage by stage.
Yeah.
Whereas if you find a hydrogen discovery or a helium discovery, that getting out of the ground is pretty quick. That all right? Can we handle this? Yeah, we can. Okay, can we transport it? Yeah, we can. So I loved it in the cases there where we can see vertical integration working. Once it gets into a larger globalist scale, it gets a bit messy.
Yeah, absolutely.
But it's a big topic. It's interesting, and and like it says in some of these articles, it can be risky business for sure. Yeah. Which makes kind of analysts sometimes kind of go, "Hey, what are you? Are you this company or are you that company?" And I get it, because if you're looking especially at bigger companies, you want the focus to be very clear. But when I look at specifically the environment we're in right now, the economy we're in right now, a smart management team is already anticipating inflation, supply chain issues, all of these issues right now. And if they're already not only prepping for them and they have solutions for them, those companies are going to stand out. They just are.
Yeah. Absolutely. Yeah, that's something we talk about a lot, is the management teams that are on top of this, and the companies that have a vision and have a strategy of how you are going to approach a choppy market like this, a supply chain issue, the stress of inflation. They're the ones that are going to rise to the top. The viable companies with real strategies are always going to rise to the top, especially when the market's a little beat up like it is right now.
Yeah, and everyone knows it's a tough market, and a lot of people are just kind of hanging in there, and it's just, we always have to just keep in mind that it is a tough market. There's no doubt. And it'll just mean that those that have the results will see a lot of attention, because people will be watching and wanting winners. And a little bit of good news probably isn't going to do much, but some strong news is probably going to get a lot of attention. And that means we really have to have a keen eye right now. Rather than just kind of go, I'll just wait and sit on my hands, wait and see. Is it no. Now more than ever, we have to be really vigilant and look at the companies and what results they have, and then focus on those ones that are doing well. That's why I really believe it's a stock pickers market. The market as a whole, we talk about it because obviously that's people's main asset, is that they might have an ETF or a BlackRock ETF or a Vanguard fund, and it's down a lot. But we hope that this section of your portfolio, the risky kind of part, because of where we are at, because of the potential it has to solve all of these problems, could be a big force for good in your portfolio.
Yeah, it absolutely could be. Well, I think you've answered a lot of people's questions, initial thoughts on this, but I will say, for anyone who has more questions on vertical integration or would like to know a little bit more about it, dive deeper, reach out to us. We're happy to have the conversations as well. Hopefully this was educational for people and kind of answered a few of the questions that I know were out there surrounding the topic. But like you said, it's a big one. There's a lot of aspects to it. But it's important to kind of just start to highlight and get the wheels turning on what exactly it really is.
Excellent. Well, thanks so much, Austin. Have a great weekend.
Thanks, Andrew. We'll chat to you guys next week.